The USD just hit a gut-wrenching 5-week low at 99.2, plunging like a stone in a storm that's rewriting the rules of global finance to the 10th of December 2025 today. The Fed's third rate cut of the year landed with a thud this morning, carving a slim 0.25% off the federal funds rate to land between 3.5 and 3.75%. But Jerome Powell's words carried the chill of a hawkish winter ahead. Core PCE inflation clinging at 8%. Easing is not assured, he cautioned, sketching a 2026 path of merely 2 more quarter-point nudges, not the flood of liquidity the trading floors had bet on with 87% conviction. The dollar index cratered accordingly, shedding another notch to 99.2, its weakest 5-week trough and a 7% year-to-date evisceration that has treasuries trembling and carry trades unraveling. And gold? It didn't merely ascend, it erupted to $4,216 an ounce, a 55% year-to-date blaze that's clawing at all-time highs, with silver trailing fire at $61 in explosive tandem. But what seized me this dawn, sifting through fresh People's Bank of China disclosures amid the market's gasp, was the relentless gold hoard from Beijing. 13 consecutive months of accumulation. The latest November scoop, adding 30,000 troy ounces to swell reserves to 74. 12 million ounces, or 2,305 tons, the longest streak on record. Year-to-date grabs totaling 1.33 million ounces since late 2024. Why this voracious appetite now, as the USD sinks to 99.2? My theory, distilled from Marathon's cross-referencing World Gold Council tallies and COMEX flows, is that China's hoard isn't defensive. It's the fuse to stage 3 of a 4-stage inferno that scorched assets from Bretton Woods to the GFC. The Fed cut cracked the dollar's dam, flooding capital to havens like gold. But Beijing's buying diversifying from a weakening USD, hedging geopolitical thorns from Taiwan to tariffs, is the accelerant fueling a breakout to $4,441 by December's end, per analyst consensus blending long forecast pinpoint and Ventura's bullish arc. BRICS murmurs of gold clauses amplify it, central banks worldwide snapping 1,200 tons this year alone, up 20%. While U.S. debt at 130%, GDP whispers fiscal trap. At $4,216, gold's not lofty. It's criminally undervalued against 350 trillion global debt and fiat's fraying faith. The window to stack? It's fracturing under China's hoard and the dollar's dive, but you still grip the shards if you seize them before stage 4 gaps, prices to $5,000 and seals the vault. Before we tunnel into this hoard-fueled blaze, let me cut through the haze. I'm not a financial advisor, and nothing here masquerades as financial advice. This is unvarnished educational autopsy from public ledgers, the PBOC disclosures, COMEX inventories, IEA projections, JP Morgan dispatches. I've excavated these strata, fused the fragments, and the mechanism unearthed isn't mirage. It's the same inexorable churn that's beggared empires and burnished barons across gold's glittering grudge. To decode why the USD's 99.2 skid and China's gold hoard are the perfect storm, birthing a $4,441 breakout, we must excavate the 4-stage colossus that's toppled titans from Nixon's rupture to Palladium's plague, a savage cycle where complacency calcifies into surge, awareness avalanches into squeeze, and detonation drowns the dawdlers. This blueprint isn't bespoke conjecture. It's hewn from the hulks of history's wrecks, from ancient Ori debasements to 1,970 seconds oil odysseys, and now it thunders through gold's arteries with Beijing's buys as the baseline. Stage 1 is complacency, the velvet vice, where surfeit seduces the sovereign. Post 1971. Nixon's gold guillotine freed fiat from fetters, consigning bullion to $35 an ounce obscurity for a decade, inflation's forge raging at double digits, yet markets muled relic, central banks cascading 500 tons yearly sales like autumn leaves. Paper phantoms proliferated, futures exploding 50-fold physical, GLD ETFs birthing 2004 with notional claims eclipsing vaults 100 to 1, open interest fattening to grotesque multiples of deliverable bars. Debt slumbered at 50% GDP, industrial gold a footnote at 3% demand, mines gushing 3,000 tons annually. Trust reigned, stack the synthetics, scorn the shiny. Complacency, crimped gold undervalued, a serpent slumbering beneath fiat's facade, priming the powder. Stage 2 is expansion, the creeping cataract where crevices craze but creeds cling. The 2000s dotted it. Dot-com detritus. Housing hydra swelling M2 50%. Fed funds at 1%. Inflating bubbles till 2008's Big Bang Lehman liquefied. 30 trillion QE cascade from global sellers. Fed's ledger leaping eightfold. Gold growled from $300 to 720 inches crisis nadir, then 1,923. By 2011, a 167% growl, but suppression shackled. Banks like JPM shorting futures. Derivatives deluging to feign flood. Prices probing then pinned. Central banks pivoted subtly. Net buys trickling 500 tons by 2015, while COMEX eligible swelled 500 million ounces, claims outrunning reality 200-fold. Expansion excavated the gulf. Debt to GDP from 250 to 350%. Inflation veiled by CPI conjury, gold's allure as negative real yield haven buried in zero-rate zephyrs. China's whisper entered. Reserves budding from 395 tons, 2,000 to 1,000 by 2010, diversifying dollar dumps amid RMB ascent. Yet surge stewed undervalued, policymakers preening as debt dragons distended, the stage set for shatter. Stage 3 is the break, the squeeze where semblances splinter and specters stir. This is the crucible, ignited by today's Fed trim and USD's 99.2 nadir, awakening to mining's malaise, central hoards hammering 1,200 tons, 2025, up 20%. China's 13-month binge, the battering ram. COMEX registered, slashed 25% YTD to under 10 million ounces, eligible 500 million, but strains surfacing as lease rates nudge 2%. Backwardation brushing with spot premiums, nipping futures 10 cents. ETF inflows, GLD, 300 tons quarterly, 2020 echoes, physical premiums 2 to 3 over spot, Kitco queues lengthening. Geopolitics goads, Taiwan tempests hike 20% haven bids, Mideast flares reroute oil 10%, BRICS blueprints, gold clauses 20%, reserves fleeing dollars by 2027, IMF murmurs. The Fed snare? Cut buckles USD 7% YTD to 99.2, beckoning bullion bids. But hawkish persistent PCE halts easing, yields rebounding 0.5 point to 3.8%. Volatility vitriol, scouring specs before sprint. JP Morgan clocks it. $4,753. Average 2026, $5,000 Q4 on 566 tons. Investor quarterly plus central 800 tons. China's 300 tons YTD. Russia 200 EM ditching dollar at 20% clip. Undervaluation indicts. Gold's cap 13 trillion trails Bitcoin's froth yet anchors no hype 200,000 tons above ground. Output capped 3,500 tons as grades gutter 30% decade. China's hoard? PBOC's 74.12 million ounces November plus 30K Troy 2,000. 305 tons Q3 total 13 months 1. 33 million ounces YTD longest streak signaling RMB fortification amid U.S. Tariffs trim 10% November but tensions taut. Beijing extends storage to foreign banks. Cambodia accepts gold as geopolitical gambit, not mere reserve. Stage 3 throttles shorts $4,216. The breakouts bellow $4,441. December math or window warps as premiums prelude. Stage 4 is eruption. The Hoard harnessed holocaust where quotes don't quest they quake. $4,441. The floor as China's buys and USD's 99. 2 wreckage rocket to $5,000. Rewriting ledgers in liquid fire. Sovereign salvo first. China unveils 500-ton quarterly. BRICS codifies clauses. COMEX claims surge 50% as ETFs swap synthetics for sovereigns. Yields yo-yo in Fed trap. Cut negatives lure 20% EM exodus. Inflation 3.2% core rebound mandates taper talk. Dollar to 95. Gold's cost collapses minus 1% real. JPM math. 566 tons. Investor Q. 1/2026. 800 central. Mine shortfall. Buffers 50,000 tons. Above ground. Blasted in months. Gapscape. 4,216 to 4,441 December. On cut tailwind. 5,000 Q4. As snare bites. inflation spirals 4%, emergency easing, dollar dominion dents. COMEX curbs weekly, defaults 20%, suits swarm GLD's cash clauses, shorts squeezed 100 billion unwind, premiums puff 20 to 40%, 4,441 spot yields 5,000, 500 eagles, mints, moribund years. Traps tango. Hawkish cut today lulls. Debt service 2 trillion 2027 prints. Inflation 4%. Cuts cascade. Hegemony hemorrhages. BRICS 30% gold trade by 2028. Counter the chorus. Yields lift. Gold lags. Trap twists. Post-pause. Print plunges them. 2011's 1,923 proof. CB's dump. Reversal rigid. Buys since 2010. 1,200 tons. 2025. Shatter. No retreat bar. Deflation delusion. Industrial subs. Gold's 5% jewelry. Investment core. Tech purity peerless. Recycling 30% ceiling. Mines multiply. 10 to 15 years infancy. CapEx crippled post 2011. Output stagnant despite $50 leap. Demand dips. Geopolitics guards. Fiscal fissures forge. IRA subsidies. Silverline gold and green. This epoch's earthquake. 1,971. Fiat Genesis meets 2008 QE eternity. But 2025 debt. Armageddon. 350 trillion. 10% GDP servicing snares fed checkmate. Cuts. Kindle inflation. Kindle cuts. Gold recalibrates as fiat's phantom bane. JPM's 5,000 no apex. 2028 6,000 whispers base if BRICS bolts. Undervaluation at 4,216. 40% shy. Inflation fair 7,000 historical. 70% below multi-year maps. Eruption vaults at 4,000. 441 December. Cascade 5,000. 500 mid 2027 as trap tires fiat's thread. Not query quicksilver of quandary. As China's Hoard hurdles gold toward $4,441 amid USD's 99.2 nadir and Fed traps tangle, the breakout beckons not blind bets, but barricaded bets possession over punt, resilience over recoil. First, vow to verifiable vault, spurn ETF ephemera with cash capitulations and futures fiascos that felled 2011 flotters, hail minted monarchs, American gold eagles, maple leafs, Kiloperth purity proclaimed for frictionless frontier flips, premiums 1 to 2% over spot your bulwark when they burgeon. Harvest from hallmark like APMEX, serial scan sans spurious surges. Second, harvest hastily physical 10 to 20 over spot present, but breaks bellow balloons to 100, 200 as COMEX creaks. Fed cut quartz but trap teases tapers. Stagger scoops, sub 4,000, 200, 10% parcels, pairing the pattern's pulse. Third, apportion astutely. 10 to 15% holdings harbor gold's 1-0 to 1 trap triumphs annals, escalating 20 if debt dirges deafen, fused with silver spark or bonds ballast against bolt from blues. Hedge the heuristic, not hazard the hearth. Fourth, fortress fast. Domicile depots for dozen ounces, anchored, assured, flame-forged or apportioned archives like Delaware for depth. Dominion yours, no depository dodges or custodian caveats crawling. Diversify dens versus draft risks in trap tempests. Fifth, Sentinel steadfast. COMEX eligible ebb weekly. PBOC tallies quarterly. Fed specs semi-annually. Kitco Claxons or Bloomberg beacons your bulwark. Blueprint bolstering sans static. The Hoard hammered breakouts here. $99. 2. The hammer's heft. $4,441. December the dawn or Windows weld with premiums portend cleavage clear. Crest the cataclysm crowned, or chronicle the convoy, chagrined as 5,000 spot scorns solstice slumbers. Fiat's frail 27 years mean. $54 fiat fathoms, unforgeable gold the gall. If the gale grips your gears, subscribe, I'll scour the surges, synchronous, COMEX chasms to China caches. Remark, $4,441 December, or trap trundles it, your ripples refine the riptide. Next, the shrouded suppressors finds forked, shorts shrouded. The stranglehold splintered. Hammer falls, hoard or hollow.